Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London, and these are the stories that set your agenda. France's president names Eric Lombard as the country's new finance minister. He'll be tasked with cutting the deficits and getting a budget over the line by mid-February. A US national security panel deadlocks on the sale of US steel to Nippon Steel, paving the way for President Joe Biden to kill the deal. And shares in Honda surge after the automaker announces plans to buy back up to $7 billion of stock, easing concerns about a tie-up with ailing peer Nissan. Good morning, December the 24th. Happy Christmas Eve to everyone who celebrates. European futures pointing lower by 0.5%. Despite the upside that's come through across the Asian session, we've had some lines crossing in the last few minutes around reporting suggesting that China plans to issue more treasury issuance in 2025, partly to fund a splurge on the consumer, to ensure that the consumer has enough funds to keep buying. So an emphasis on supporting the Chinese consumer, it seems, again, according to that reporting. FTSE 100 futures here in the UK currently pointed to gains of around 0.5%. S&P futures are flat. Nasdaq futures in similar territory. But you did see gains yesterday for both the Nasdaq and the S&P by about 1%, despite the fact that a consumer sentiment survey fell to the lowest level in 3 months. You saw big rallies coming through for mega cap tech names, particularly for the likes of Nvidia. And right now, across the Asian session, TSMC is pushing higher as well, notching a fresh record high in Taiwan. Let's flip the board and have a look cross-asset before we get on to the Asian session. The US 10-year is currently yielding you 4.58. Of course, volumes will be thin today, given where we are in the calendar. Euro dollar at 103, back below 104 for the single currency. Brent trading a little higher, up 0.4% so far in the session at 72.96, currently closing in on $73 a barrel. And gold at 2,619, the yellow metal up 0.2% so far in the session. Let's flip the board and have a look on the Asian session story then. Again, the lines around China and its plans to issue more treasuries, more sovereign debt in 2025. Across the benchmark, you are seeing gains in Asia of 0.4%. The CSI 300, mainland China, of course, currently up 0.8%. So far, a decent session for mainland Chinese stocks, despite the news that President Biden and the team at the White House are looking and has started an investigation into so-called legacy chips that will end up at some point on the desk of incoming President Trump further down the line. The Nikkei currently at 39,000, down 0.2% over in Japan, and a focus on what the finance minister has been saying around the currency, teeing up speculation that maybe there will be more intervention. There's verbal intervention at this stage, at least, with the Japanese yen currently up 0.1% at 157 versus the US dollar. Now, to the politics of France. We do have some developments and some news on that front. We've been waiting for it, of course. French President Emmanuel Macron has appointed Eric Lombard as the country's finance minister. Lombard, an experienced finance professional, will be tasked with passing a 2025 budget and lowering the deficit. For more, let's bring in Bloomberg's Claudia Cohen in Paris. Claudia, what does the new cabinet look like? And tell us a little bit more about the new finance minister.
Yeah, sure. So I would say, first of all, that there is no real change, no real major change in the cabinet, because a few of Michel Barnier, former Prime Minister, were actually reappointed. A lot of Emmanuel Macron veterans also were reappointed. And the big surprise was that actually two old Prime Minister, Elisabeth Borne, but also Socialist Manuel Valls, were also appointed in the new government. So in terms of the, let's say, center-right orientation of this new cabinet, it really looks like the previous one. Then the one big surprise, and maybe the Christmas gift, if I can say so, for French people, is Eric Lombard, the new finance minister. Eric Lombard is a really well-known financial person in France. So he's a former banker and is a former top executive in the insurance sector. He worked at BNP Paribas, at Generali also. And before being appointed as the new finance minister, he was the head of La Caisse des Dépôts, PFO, which is basically the public finance arm of the state. So investing in long-term public housing, green infrastructure, and everything. So he knows very well all the financial details of the French state.
Okay, so someone who brings real and deep experience when it comes to the French state and the world of finance as well. But more broadly, Claudia, what are the challenges, the main challenges facing this new cabinet?
So I would say too, so first of all, let's recall that the new cabinet will meet early January, so on the 3rd of January. And then after that, on the 14th of January, François Bayrou, the Prime Minister, will lay out his plan during a speech at the National Assembly. And at this exact time, there could be a first no-confidence vote. So he will need to convince from early January all the opposition, so left-wing political party, but also obviously far-right Marine Le Pen, that is the main of the situation. Then if we go into some details, obviously the main challenge is to elaborate the 2025 budget. So here the tricky part will be, let's say, to find the best equilibrium between how much of public spending do you want to cut and how much of tax increases do you want to add on corporates but also on household, because if you cut too much, obviously, public spending, then you will have all the socialists not happy about it. And if you put too much pressure on household, you will have far-right Marine Le Pen not happy about it at all. Let's say maybe one important thing, like after the appointment of the new cabinet yesterday, François Bayrou, he was on French TV, and he had, I would say, kind of a pro-business speech, saying that the companies, even the biggest company, shouldn't take all the burden of the French deficit. So I would say now, if you talk to companies of the recall, they would tell you that there is a bit of relief at the moment, and obviously they're waiting to see all the details of the budget early January.
OK, so we wait for that meeting in the new year and details of the budget as the new team starts to build on that. Bloomberg's Claudia Cohen in Paris. Thank you for the update. To the US now, where President Biden is set to make the final decision on the sale of US steel to Nippon Steel. That's after a national security panel deadlocked on its review of the sale. The president has long indicated his opposition to the transaction. For more on this, let's bring in Bloomberg's Stephen Stupczynski with the details. Stephen, what do we know?
We know that the CFIUS review came out. They were split on it, so that means that it goes to Biden to essentially be the tiebreaker. It's his call. He has 15 days to decide whether or not to approve the deal. Now, as you mentioned, he had indicated that he wasn't for it. He said that U.S. Steel, a storied American company, should be American-owned, and that it should not lead to any loss of employees or any closure of facilities. Now, of course, there is a chance that he doesn't make a decision within the 15 days, but with incoming President Trump, he has said that he would kill the deal. So either way, it's not looking very positive for Nippon Steel's offer to take over U.S. Steel. Now, why is Biden doing this? It seems to be an interesting move, especially since the U.S. is usually open to foreign direct investment. But it was a very tough political year with the election. On top of that, Biden is from Pennsylvania, home to U.S. Steel. The steel union as well has been against this deal out of fear that Nippon Steel might decide to close plants or lay off workers. Now, the Japanese company across the board has said that they will not lay off any workers, and U.S. Steel president actually had an op-ed in the New York Times over the weekend saying that without such a deal, the company would be in decline. They need the investment to help upgrade their facilities and compete against a strong China. China is the world's largest producer of steel, and it's difficult for U.S. Steel to compete with China without a large investment from Nippon Steel. So overall, it is looking like Biden is likely to scrap this in the next 15 days. Nippon Steel will be, of course, advocating for this to go through. They have already publicly, but it is something that is the market is watching very closely.
Stephen, are we going to be looking back at this in 1, 2, 3 years' time at the demise, potentially, of US Steel and think this was a hostage to fortunes of political powers, the unions in the US? The idea that a Japanese company would pose a national security threat, the idea that a Japanese company that is offering to invest in this facility would be a challenge. Is this the future for US Steel 2, 3 years down the line when we unpick this?
You know, I think this is going to be looked at as potentially just really bad timing for Nippon Steel. When they were looking at the takeover, you're going into a really tough election year. You know, they made the announcement December 2023. I remember where I was. I was actually in Tokyo at a restaurant. I had to log into my Bloomberg terminal to write the story because that news was breaking, but it was an election year. You know, 2024 was going to be really tough. And US Steel, they have this deep history. They rebuilt, they helped boost the U.S. economy to make the U.S. one of the most powerful countries in the world following World War II. And for a foreign company to take it over, even a U.S. ally, of course that would face some opposition by certain states. They could have looked at Biden's history. He has a close connection with the unions and with the state of Pennsylvania. So all those things together, it is a question, was it perhaps a miscalculation by Nippon Steel? What's also interesting is they're offering such a large premium for US Steel. They're offering over $14 billion to buy out the company, much more than any of the other previous offers in 2023. So despite that, they couldn't get it through. So it's purely a political play. Will we be looking at this a few years down the line? Perhaps. Maybe we'll be looking at what Nippon Steel does as a plan B. Are they going to double down on other countries like India? And will the Trump administration be saying, hey, we wish we got that investment instead?
OK, Stephen Stupczynski, excellent in terms of the context as we look at a deal likely to be scuppered by President Biden. We'll see. He has those 15 days, of course, to respond. Stephen, thank you. Join us out of Singapore on the fate of US and Nippon Steel. Now to Japan, more squarely, but in the corporate space, focused, of course, on the automakers. Honda shares soaring as much as 17%. You can see gains there of close to 13% right now after the Japanese car maker said it will buy back as much as $7 billion of stock. This follows yesterday's announcement, of course, of talks to effectively acquire ailing peer Nissan.
Once the definitive agreement is concluded, the holding company will be incorporated and be listed on the prime market of the Tokyo Stock Exchange, subject to obtaining necessary approvals from relevant authorities in resolution at each company's general meeting of the shareholders. The visibility of the timing is August 2026.
In order to work together, we need to benefit from the huge synergies. Otherwise, it wouldn't be meaningful in the eyes of the stakeholders. So that is why we agreed to start the discussion. That is why we are making this announcement today.
Well, Bloomberg breaking news editor Gareth Allen joins me now from Tokyo, been following all of this for us. Gareth, the markets seem to be cheering this. I wonder the reaction when we look at the share move in Honda, currently up around 12.5%. Is this investors responding to the buyback or investors responding to the buyout of Nissan?
Yeah, it's the former. It's very much the buyback that's been rated today. They cancelled an existing 100 billion yen buyback program, and they've replaced that with a 1.1 trillion yen program. Very big, but essentially it's because they're going to be going into merger talks going forward. They'll have their hands tied, so they won't be able to implement buybacks during that period. So it's more bringing forward the buyback than it is necessarily a new program. Nissan's been a bit all over the place. They were down quite heavily this morning, about 7%. But after lunch, they've come back. I think the market analysis of the deal, the potential synergies that are there, the investors are looking at that more rationally, and that, as you say, the rescue of Nissan by Honda is probably going to be in the long term good for Nissan.
Yeah, you can see the shares performing well, as you say, turning up currently up 6% as analysts go through the details of this deal. Gareth, what are you and the team watching for then in the weeks and months ahead in terms of how this story moves forward?
Yeah, that's right. So I guess what happens to Renault's stake in Nissan is going to be a major focus point. 36% stake they still have in Nissan. There was some talk leading up to the announcement that Foxconn might be interested in acquiring that stake and in effect acquiring Nissan. But we have sources now who've said that that's been put on the back burner, and certainly in the time being, for the time being, while the merger talks are ongoing, Foxconn is out of the picture. There's also the Mitsubishi question. Will Mitsubishi Motors join the merged entity, and there's a decision coming on that by the end of January, they've said. Then the merger negotiations that goes through, they're aiming for about June to get a final decision made, and then the holding company to be listed in the middle of next year.
OK, Bloomberg Breaking News editor Gareth Allen looking at Mitsubishi and Renault and how they respond to this planned merger, of course, between Honda and Nissan, with the time frame looking at June of next year in terms of at least building out the framework for this. Gareth, thank you very much indeed for the latest, and you can see both stocks moving high in the session as investors pass the details of that deal and, of course, the buyback from Honda. You can get a roundup of the stories you need to know as well to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB, go on the terminal. Coming up, European natural gas prices rise as the clock ticks down to the expiry of a key pipeline transit deal between Russia and Ukraine. We're going to have the details next. This is Bloomberg. Welcome back. European natural gas prices climbing for a third day with a week left, just a week until the expiry of a key pipeline transit deal between Russia and Ukraine. Prices rising as much as 3.4% yesterday, following a 7% jump last week. That's as doubts grow that flows across Ukraine will continue beyond December the 31st. Let's bring in Bloomberg's Priscilla Azevedo-Rocha for the latest on this. Priscilla, what are the chances of this transit deal being extended, or is that now an option that is not seriously being considered? Where do we stand as we count down to that deadline?
Hi, Tom. Good morning. So the chances right now of this transit deal between Russia and Ukraine to be renewed, they're very, very slim. And that's because it requires political will. It requires Russia agreeing with Ukraine to continue transiting gas from east all the way to Western Europe.
How serious a knock would this be if we lose this transit deal for some of those Eastern European nations that are still taking in the supply of Russian gas? Where would they look for alternatives? What are supplies and inventories looking like? How significant a blow could this be for those nations that are still somewhat reliant on Russian gas?
The amount of gas that comes from Russia through Ukraine to Western Europe right now is very low. It accounts for 5% of all the supplies that Europe is getting. But because of timing is really, really bad. So this could be a significant blow, because this winter is turning out to be colder than previous winters, simply because Europe right now is effectively a net importer of energy, and there's simply not enough supplies abroad, right? We're expecting to import LNG from the US, from Qatar, but those projects are not ready yet. And we're expecting to get all this gas from abroad like from later next year. So right now we are in a position where timing is simply really, really bad. For countries such as Slovakia, which is completely landlocked, the alternatives would be to import LNG through Germany, and that implies a higher cost at a time we're in the middle of winter. And also you can see how bad the situation is starting to look, but on the region's inventories. Gas inventories are very, very low. They have fallen below the 5-year average. And so to sum this up, it's really, really a matter of timing.
OK, so the timing is putting pressure on those Eastern European nations. What are the alternatives? You talk about Qatar, you talk about the US and the fact that some of those projects still need to come online. As those Eastern European nations look potentially at the collapse of this deal, where are they searching for alternatives, particularly, as you say, inventories are being run down?
Yes, they could still get gas from Russia through Turkey, which is the other alternative that is still viable. There's liquefied natural gas and so on, but all in the deployment of renewables, of course. But all of this implies importing energy, and it comes with an extra cost. So they are still reliant on this gas because it would be the cheaper option. Some people would criticize this move. We're going into the third year of Russia's war in Ukraine, and those countries should have effectively have diversified their supplies and so on. But at the end of the day, it comes at a cost. And importing gas from Russia through Ukraine was the most economical option so far.
OK, there's the challenge. There's the payoff then, as those restrictions, or at least that deal, looks set to collapse, potentially by the end of December. Bloomberg's Priscilla Azevedo-Rocha with the details and what the alternatives could be, with an eye maybe to that Russian gas through Turkey. Thank you. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Some other stories making the news this Tuesday, December the 24th. Luigi Mangione has pleaded not guilty to murder charges over the shooting of United Health executive Brian Thompson. Mangione appeared handcuffed in a Manhattan court, as you can see, to be arraigned on multiple counts, including first and second degree murder, criminal possession of a weapon, and having a forged driver's license. His lawyer has expressed concern with the way the parallel state and federal cases were playing out, saying Mangione was, quote, being treated like a human ping pong ball. A US bipartisan committee report has found what it calls substantial evidence that former Representative Matt Gaetz paid several women, including a 17-year-old girl, for sex and used illegal drugs while in Congress. The committee report accuses Gaetz, Donald Trump's initial pick for Attorney General, of violating several House rules and standards of conduct. Gaetz has denied all wrongdoing and dismissed the allegations. Former US President Bill Clinton has been hospitalized for observations after developing a fever. A spokesman says the 78-year-old remains in good spirits. The former president was active on this year's presidential campaign trail. Clinton underwent quadruple bypass surgery back in 2004. President Joe Biden's administration is launching an investigation into Chinese-made semiconductor chips. The probe is into so-called legacy chips. While they're not as advanced as the chips driving AI, the older technology is used across a wide range of applications. The move tees up potential tariffs under the incoming Trump administration on a sector that the US says may pose a national security risk. And China's long-dated government bonds extended losses after Reuters reported that authorities have agreed to issue 3 trillion yuan of special treasury debt next year. That is equivalent to a little over $400 billion. It is 3 times the amount that was issued this year. The focus from the Ministry of Finance is on supporting the consumer. The quote coming through after a 2-day meeting of the Ministry of Finance is to, quote, expand the magnitude of fiscal spending and accelerate the spending pace. So the focus shifting to the consumer, building on comments that we've already heard from senior Chinese leaders and pledges to lean into the Chinese consumer in 2025, something that economists have been pushing for quite some time, and at a time, of course, as China prepares for potential additional tariffs and trade frictions with the incoming Trump administration. Coming up, Israeli Prime Minister Benjamin Netanyahu says there was some progress on a potential deal. More details. This is Bloomberg. Good Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. France's president names Eric Lombard as the country's new finance minister. He's going to be tasked with cutting the deficit and getting a budget over the line by mid-February. A US national security panel deadlocks on the sale of US steel to Nippon steel, paving the way for President Joe Biden to kill the deal. And shares in Honda surge after the automaker announces plans to buy back up to $7 billion of stock, easing concerns about a tie-up with ailing peer Nissan. Let's check in on these markets then. It was a solid day yesterday for US stocks with gains of a little over 1% for the Nasdaq 100, powered again by Mag 7. And hasn't that been the theme of 2024? And despite the fact that a consumer sentiment survey came in at the lowest level in about 3 months, suggesting that concerns about tariffs are still starting to filter through to the US consumer. We'll see if that continues to play out in 2025. European stocks currently pointing lower by 0.5%. Here in the UK, though, the FTSE 100 futures picture is brighter, looking to add 42 points. Of course, the volumes will be thin on Christmas Eve as we look ahead to Christmas tomorrow, of course. S&P futures currently flat. Nasdaq 100 futures also flat after the gains of yesterday. Let's flip the board and look cross assets. In terms of what's happening in the US Treasury markets, currently the benchmark US 10-year is largely unchanged in the session, yielding 4.58. Euro dollar, the euro is back below 104, currently giving you 103 versus the US dollar. Will we get to parity in the first quarter of next year? That is the call for some FX strategists when it comes to the single currency. Brent trading close to $73 a barrel, up 0.5% in the session, and the yellow metal at 2,616. Gold up 0.2% in the session. The Asian session has been pretty solid. It's been a pretty bright session. The handoff, of course, from the US. So let's flip the board and have a look at how things are shaping up across the Asian session. Japan will be trading tomorrow, as will China as well, worth noting, as many major markets, of course, will be closed for the Christmas holidays. China and Japan will be open. The benchmark MSCI Asia Pacific Index currently gaining 0.3% over in China mainland. CSI 300 up a full percentage point right now. Details coming through from the Ministry of Finance in Beijing around issuing more special bonds to support the consumer next year. The Nikkei over in Japan is currently down 0.3%, and the yen in focus, strengthening 0.1% versus the US dollar at 157 after the Minister of Finance came out and warned against speculation in the currency, given the weakness that we've seen for the Japanese yen. Now, to emerging markets where Brazil's central bank has stepped into markets again to prop up the real. The bank announced it will auction up to $3 billion on the spot market on December the 26th as it tries to meet surging demand for the US dollar. The rout was sparked by concerns about the sustainability of the country's debt. To the Middle East now. In the past year, the Middle East, of course, has seen dramatic geopolitical developments. There is growing hope, though, that now a ceasefire deal in Gaza might finally be near, perhaps coming in stages, starting with the release of humanitarian hostages. Here to discuss the outlook for the wider region in 2025 is Ona Ant, Bloomberg's managing editor for the Middle East and North Africa, and Bloomberg's Dan Williams in Jerusalem. Dan, we'll start with you. Israel coming out recently in the last 24 hours or so, confirming that they assassinated Haniyeh of Hamas. It was largely speculated that was the case. Talk to us about how that ties into the negotiations, the conversations happening right now around a potential ceasefire in Gaza.
Good morning. Yes, that acknowledgement was delivered by as part of a speech given last night by Israel's relatively new defense minister, a man called Israel Katz. He's quite an experienced player in Israeli politics, and he does have a history of potentially stealing the limelight, occasionally stealing the thunder, even from the Israeli prime minister when it comes to announcements. So it could be he did this on his own initiative. However, it's worth remembering the speech specifically addressed the Houthis of Yemen. This appears to be the last link in the chain, or in the so-called Iranian axis, against which Israel has been battling for the last 15 months. They're really the last man standing in terms of keeping up a cycle of fire, regular attacks from as far away as 2,000 kilometers at Israel only last night. Indeed, 2 o'clock this morning, the Houthis again fired a ballistic missile at Tel Aviv. It was intercepted, Israel says, outside Israeli borders. Nonetheless, they're really keeping up a rate of fire while Hamas in Gaza, Hezbollah in Lebanon, Shiite parties in Syria and in Iraq will have really been put on the ropes by Israeli counteraction in recent months. The threat specifically there, I think, a veiled threat to assassinate Houthi leaders, not necessarily linked to the hostage deals. There's been a degree of speculation, specifically by Israeli officials, over the last 2 weeks, indicating a deal could be imminent. No confirmation yet for Hamas, a degree of confirmation from US officials who've been shepherding the talks. I think the Prime Minister yesterday was really trying to manage expectations. He said there has been progress, but he said a measure of progress. How you quantify that, I don't know, but it would appear that Netanyahu is telling his people, without giving details, we're working on this, it could be close, but perhaps not as close as you hope.
Okay, so making progress in terms of that potential ceasefire, but apparently more work still to be done to get that across the line, and maybe a warning as well to the rebel group in Yemen, as you say. Dan, given everything that's transpired over the last 12 months in Israel and amongst its neighbours, what are you going to be watching above and beyond that what would be a crucial ceasefire, of course, as you look into 2025 on a region that has been radically reshaped?
Well, here I'm going to lift a catchphrase from the Prime Minister of Israel. When he's asked this question, he says the answer is 3 words: Iran, Iran, Iran. We've talked about the Iranian proxy being the enemy that Israel has faced here, in fact, an adversary of some US-aligned Sunni Arab powers in the region that have found themselves on the same side of Israel in recent months. And indeed, while the Israelis have been whittling away at the proxy forces of Iran, they've been increasingly battling Iran directly. In recent months, there's widespread speculation Israel may carry out a long-awaited attack on Iran's nuclear program, a long-threatened attack by Israel, threats going back 15 years. Keep in mind, there is a very friendly US administration coming in next month. Donald Trump returning to the White House, already making very pro-Israel noises of the kind that might encourage Israel to tackle Iran head-on, directly, militarily, and at the same time hope that what flows from that is a long-awaited, long-hoped-for normalization deal with Saudi Arabia. So again, everything would appear to flow from Iran, how Israel handles that, and the US administration, and what follows in terms of US relations with the rest of the region.
Okay, and arguably, as you suggest, a weakened Iran, given the undermining of some of their proxies. Onar, let's bring you in at this point, because, of course, when we talk about Iran, we think about Syria and arguably, again, the geopolitical knock that Iran has taken with the fall of Assad, who, of course, they had supported with Hezbollah. Oh, no, what are you looking for in terms of how the story in Syria is evolving? We've seen leaders from the Middle East meeting on the ground with the new leadership, with HTS, but at the same time, the involvement of Turkey and Israel in parts of that country, at least along the borders. What are you seeing in terms of the shifts there? How significant are the developments on the ground right now in Syria?
Well, in terms of the visits and meetings by foreign leaders, regional powers such as Turkey and some of the Arab leaders going into Syria is obviously a sign of validation of the new Syrian leadership, interim government led by Ahmed Al-Sharaa. But putting that aside, I think the single most important issue to watch going forward will be how the two sort of key neighbors and players in Syria, in this case, Israel and Turkey, basically engage with the new Syrian leadership going forward. The key question that both of those neighbors, Israel and Turkey, have right now is that the vacuum, the political or security vacuum, if we can call it that, in the aftermath of Assad's toppling, can be used or may be used by different armed groups that these two countries see as security threats for themselves. They are concerned or worried that security armed groups, from US-backed Kurdish rebels to jihadists or other groups, can use Syrian territory as a launch pad for attacks against Israel or Turkey. And we have seen that both countries taking proactive measures on their borders with Syria to sort of take up positions and prevent that from happening. That is going to be a key determining force going forward in Syria in terms of how the political landscape in that country is shaped going ahead.
And on that point, Onar, what is the level of conviction? How concerned or not are some of these regional players? Given they've been meeting with the leadership, what is their level of confidence that the future governing powers of Syria will align with their own interests?
Well, they certainly are in some sort of a race to engage with the Syrian leadership to try and show them that both the Arab world and other regional powers, such as Turkey, have an interest in keeping Syria united and helping it sort of recover from all the damages inflicted upon the country by 14 years of civil war. That includes provision of certain services. The Qataris just offered help to manage the Damascus International Airport and basically make it up and running again, to construction. Everything from new companies coming into Syria to do that construction, to how that is financed. This is all being discussed with Syrian leaders at the moment. So, yeah, there is great, I think, confidence both in Turkey and some of the Arab countries that the new leaders in Syria are going to, well, they have already divorced themselves from their past, where they have been accused of or seen as an affiliate of Al-Qaeda. That's an important step. And in that sense, the Syrian leaders, the new leaders, are sort of making the right moves in terms of how they distance or appear to distance themselves from that past. But also, they are keen on bringing those Syrian leaders into a new political normal where Syria no longer poses a threat to some of its neighbors or the Arab countries beyond their neighbors, so that other external players such as Turkey and Israel do not have to sort of keep an active role in Syria, because that will also obviously, that has the risk, potential of being a destabilizing factor in Syria. That is the aim of this multi-pronged diplomatic approach, both by Syria's neighbors and other Arab forces, other Arab countries in the Middle East.
Dan, I want to bring you back at this point before we let you go, joining us out of Jerusalem. Dan, what is your sense as to whether or not Netanyahu will continue to be the Prime Minister through 2025, the political pressures? How has the political landscape in Israel shifted in the last 12 months or so? What does it portend for the future politically of that nation as you look into 2025?
Well, I think without question, his domestic standing took a real drubbing in October of last year over the fact that Hamas managed to blindside Israel with that truly devastating attack that triggered what is now a regional war. However, support has rallied for him, especially given the strategic turnaround of the last 3-4 months. There's a sense that Israel has turned the tide, not only this specific war, but in a way that's transformed the entire region, something that many Israelis, many observers, many in the world wouldn't have seen as possible only half a year ago. So he will certainly be hoping that that Chamberlain to Churchill transformation will serve him well, at least when the scheduled election comes up in 2026. We're almost 2 years away from that, and there's really nothing to suggest that there would be a snap election triggered before that. He has a strong and, on the face of it, stable coalition. Indeed, he has a very friendly administration coming in under Donald Trump, as we've discussed earlier. So I think nothing really threatens his standing. Then again, it's worth remembering he's well into his 70s. He had a pacemaker installed 2 years ago under the pressure of another domestic crisis over judicial reform. So again, as long as Mother Nature plays along, I think there's every reason to expect that he will continue to serve at least through 2026 and will try to build on Israel's belated achievements in this very, very, very destabilizing war to achieve a peace deal with Saudi Arabia and perhaps something conclusive, as we discussed, when it comes to Israel's long showdown with its archenemy Iran.
OK, a Chamberlain to Churchill transformation for the Israeli Prime Minister as we look to his political future as well. Always excellent analysis from both Ona and, of course, Bloomberg's managing editor for the Middle East and North Africa, and Bloomberg's Dan Williams there joining us out of Jerusalem. Thank you both very much indeed. Coming up, China's government bonds extend losses after a report of plans for a record issuance of special treasury debt to boost the slowing economy and support the consumer. The details are next. This is Bloomberg. Welcome back. China's long-dated government bonds have extended their losses. That's after Reuters reported that authorities have agreed to issue a record 3 trillion yuan, or about 411 billion US dollars, of special treasury debt next year. Let's bring in Bloomberg's Shanghai bureau chief Charlie Zhu for the details. Charlie, thanks for joining us. How significant would this be if confirmed, and what does it tell us about the determination of China's leadership to finally support in a material way the consumer of China next year?
Well, the 3 trillion yuan figure, according to Reuters report, is much higher than expected, and it represents a sharp increase from this year's 1 trillion yuan, and that shows how serious the Chinese government is about its economic situation next year. Actually, the plan to increase fiscal spending is not new. I mean, the report came just after an hour or 2 hours after a statement put out by the finance ministry in Beijing today, saying that they're going to increase public spending to finance consumer consumption subsidies, upgrade equipment, and also boosting investment in manufacturing, high-end manufacturing and technology sector. And earlier this month, if you still remember, China's Politburo put out a statement, saying that China will adopt a much more proactive fiscal stance. That has raised a lot of expectation that China will increase deficit spending and also increase the issuance of so-called special sovereign bonds or special local government bonds to drive domestic consumption. So the question is, how much bonds, more sovereign bonds, special sovereign bonds China will issue. It remains everyone's guess. If confirmed, this will be record, but you won't be able to find out until March next year when China's legislators meet in Beijing to approve China's budget and economic growth. According to some local media reports and estimates by economists, the economic target for next year is set at 5%. So to meet the target, China needs to boost fiscal spending. At the same time, it needs to step up the use of monetary tools. It has said, it will adopt a moderately loose monetary policy next year, and that's a shift in stance, in 14 years.
Yeah.
So last time when China adopted the policy was 14 years ago, right after the global financial crisis.
Yeah, that 14-year time frame is important, isn't it, in terms of the context? Charlie, to what extent is this a policy-making apparatus in Beijing that is preempting a more aggressive and a more tariff-hungry Trump administration?
Yes, it reflected concerns about the uncertainties to be brought about by Trump's presidency. Trump has threatened to increase the tariff on Chinese exports. So for the Chinese government, they think people are thinking that they have to wait a bit to see what Trump's going to do to China in terms of trade in the first few months of his presidency. The NPC meeting, as I mentioned just now, is going to be in March. So they still have time, to decide the actual amount of debt or deficit spending they want to, target for next year.
Okay, Charlie Zhu, Bloomberg's Shanghai bureau chief. Thank you very much indeed with the details on this reported ramping up of special bond issuance from Chinese authorities as they look into 2025, at least reportedly at this point, with a focus on the consumer. Now, switching focus to what is happening in the semiconductor space, but with a nice kind of festive twist to it. ASML here in Europe, of course, in the Netherlands, has created what may be one of the most coveted items for tech fans this Christmas. You can see pictures of it on your screen now. For a mere €208, employees of the Dutch chip-making machine firm can buy a Lego-style miniature of a lithography machine, presumably an extreme ultraviolet lithography machine, from the company's website. The model was celebrated, or created to celebrate ASML's 40th anniversary. Apparently very hard to get if you're not an ASML employee. So maybe a secondary market for those. Look out for those in the new year. €208. There you go. An extreme ultraviolet lithography machine in Lego form. The real thing costs well above €200 million and has to be shipped in about 3 different aircraft. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back. December the 24th. Happy Christmas Eve, everyone. The focus today, at least partly, is what's happening in France. With the cabinet being picked, we have a new government. They will have to, of course, carve out a new budget that appeases both the extreme left and the extreme right. And this is a reminder of the fact that the political breakdown, arguably, in France has dramatically impacted the French equity space. You look at the banking stocks, for example, but the underperformance of French stocks versus their European counterparts, the most since 2010 this year. And that underperformance, of course, could continue. There is no sign yet of political stability, no real clarity in terms of what that budget will achieve and whether or not you will have a government still in place through the full term to enact any budget they do decide on. So that underperformance could continue into 2025, and there, as you can see, has been pronounced, at least the most since 2010. Let's flip the board and bring the focus back to home, where the UK is looking cheap, as always. Will UK stocks shine in 2025 is a question that this chart poses. Shares trading at about a 40% valuation discount to global peers. Is there an opportunity to lean in to these dividend-paying stocks in the UK? The valuation is there. If you get the Bank of England cutting rates more than maybe the markets expect, is that potentially an opportunity? And finally, on China stimulus, we're getting more details in terms of what is planned to support the consumer in China. Worth noting that Chinese stocks on the mainland has performed relatively well towards the end of this year. We'll see if the detail comes through to support that narrative into next year. There's plenty more coming up. Stay with us. This is Bloomberg.